What is up, you guys? It has been about a week since I put a video out here on this channel. I've been pretty sick and I plan to really only upload on this channel 3 times a week. So I decided that at the time of being sick, I was just going to hold off for a whole week. But today we're back. We are going to talk about the S&P 500. Big down day yesterday, a little bit of a recovery right now. We'll talk about CPI data yesterday, talk about inflation numbers. We're going to go over where I think SPY will probably end up end of the year, and we're going to really zoom out and look at the next 6 to 18, maybe even 24 months as an investor and or a long-term trader. So hit the like button, subscribe, check out our Discord community down below. Link is in the description. You guys get access to free courses, free live streams, free seminars, free webinars that drop all of my long-term trades over here as well, and long-term investments, I should say. So go check it out. It's a phenomenal community to be a part of. We're over 8,400 members strong, and it's completely free. So let's look at S&P 500 on a weekly time frame. The very first thing that you guys are going to notice, if we just zoom all the way out, basically since let's just look right here at about 2014 till right now. Now, whether you're a trader or you're an investor, looking at these major time frames and learning how to read candlesticks, in my opinion, is very, very important. Even if you're a long-term fundamental investor, I still think that understanding from a technical standpoint if a stock is overpriced or underpriced, or where the technical setup and these patterns are going to go is still very important. And even if you don't believe in patterns and you don't believe in probabilities trading off of patterns, you can still watch price action and understand when we're getting into these like overbought territories. So looking at this, the first thing you're going to note is that down here, this is where all that volume is on the heat map. So we have huge volume between 291 225. I don't think we're going to get there. If you listen to someone like Michael Burry, he thinks we still have about another 40 to 50% drop, which if you follow Michael Burry and you believe what he says, which he's been right in the past, I'm not saying this is going to happen, but that would put us back down to about 288 to about 225 on SPY in the next 6 to 24 months. Now, I don't think we're going to get that low, to be quite honest, but there are some key levels to be watching. So the very first thing is that we draw our Fibonacci retracement out here. I have an auto fib that will do it, but if we were to draw it out, we would go from this swing low up to this swing high. So basically from the COVID swing low up to the swing high that we had in January of the beginning of this year. So if we were going to draw that out, the main magnet zones that we tend to see on retracements is the 0.51 and the 0.6 or the 0.5 and the 0.618. These are those major support zones. The other thing to note is the 200 SMA. So the 200 SMA right here tends to be a magnet over a longer time frame on this big chart. So if we were to zoom out, it's going to basically bring us back to 2011. There are years that we will not touch the 200 SMA. But every single time that we have a solid pullback, we tap this 200. We had this run, if you guys remember, in 2016. That was when I got heavy into trading. We had this major pullback down to the 200 SMA. At the end of 2018 into early 2019, I remember this drop significantly where we had a big market correction and the market dropped 20%, bounced off the 200 SMA. You have, pandemic, where we dropped below the 200, but basically recovered and bounced off the 200 SMA. And I'm looking at this 200 SMA again, and I've been saying this before. This is why I think that SPY is still going to hit 350, 360. Now, I'm very surprised that back in June of this year, June 13th, I'm surprised we didn't just take that 2.5% drop down to the 200 SMA, but we did end up bouncing. You can see that we did end up rejecting here at 430, 425 not too long ago, which if we were to draw out this pivot zone on this big time frame, this was a very strong old support, which is therefore going to act as a very strong resistance point. Now we're under this EMA, and looking at where we currently are, we could draw a smaller Fibonacci from this swing low to swing high. And you can see that if the market closes or breaks below $388, it is almost a given that the S&P 500 would drop back down to 358, potentially down to 354. So if I'm looking at this bigger time frame, I believe that probabilities, I think that I'm saying probably 65% chance that the S&P 500 is going to drop another 11 to 12% down to 350, and I think we're going to bounce there. Now, if we don't, and we look at the next 6, and this is, remember, next 6 to like 12 months, if we don't hold 350, that next level is 325, and if we don't hold 325, we're going down to 275s. But on the contrary, if you are somebody who is bullish, the levels that you're really going to be watching are going to be up here. And this is not a phantom print. I should get rid of that. That's the wrong one. But if we were to draw this pivot here, what you want to see is a pushback up to 430, hold over 430, and then a push through 450 where we have this heavy level. But personally, I think that we're going to see a drop back down to 350 within the next couple of weeks. The reason we saw this rally basically from June into July was because June numbers for CPI were terrible. But in July, we saw that number get lower. And so a lot of economists and a lot of people thought to themselves, okay, inflation has peaked. It's not getting worse. It was bad, but it has peaked. And that's why we had this big bull trap, in my opinion, the 16% run within a month, or basically within 2 months. And then we saw CPI data come out yesterday showing that it was higher. Even if it was only 0.01, and if you remove a couple of things, it was 0.06, it's still higher, which means we may not have peaked. And if inflation runs back up to 9%, 9.5%, 10%, it's going to drive the market down to 350, 325. So this is not somebody who's just out here to spread FUD. I don't have a ton of short positions or a ton of put positions out there in the market. It's just something that I wanted to share looking at these bigger time frames on the market. And the same thing is set for, triple Qs. We had this rising wedge, and if we were going to break through this level, we'll see that move down to 275. Hope this video helps, guys. Comment, let me know what you think, and I'll see you later. Peace.